Well, I got to say, episode 38 to me really provided, I think, some of the best guests that have ever appeared on the What Do We Do podcast. I mean, that Mike guy, what was his name? I think Mike Sullivan of Brand 25 and Metro Detroit Golfers, and whoever that Kyle guy was. I mean, just incredible insight on their company and everything that they do, Dewey. I just, what a wonderful episode. I got to be honest.
Hey, Kyle, good to see you. Sully, good to see you back in the control room where you belong. Are you kidding me right now? For those that don't know, episode 38, we had two amazing young men here from Brand 25, none other than Kyle Bogey and Mike Sullivan. So, yes, Kyle, I agree. It might be a timeless episode as well as being timely, that being episode 38. So yes, everyone out there that sees us video wise on YouTube, also listening to us on Podcast Nation, please go ahead and listen to episode 38 if you haven't. But Kyle, as we always say, that's yesterday's news. We're trying to be forward thinking. We want to know about tomorrow. We want to know about next week, not 2 weeks ago. So, hey, I don't know if you're yesterday's news. I don't know if Sully's yesterday's news, but you're definitely episode 38.
Well, it's good to be back in the host chair, if you will, after being in the guest chair for episode 38. And again, we appreciate everyone downloading, subscribing, sharing, however you consume podcasts, whether you're watching, listening, whatever it is. Obviously very much appreciate that. But yes, like you said, we are moving forward now, episode 39, and we do have a lot to get into, and this is, incredibly relevant, talking about real estate investing. And, we'll do a basic, I think, elementary look at what real estate investing is, why it's important, common mistakes that you can, potentially make. But before we get into the what, the why, the concerns, all of those things, I just remember, as a young individual, it was impressed upon me how important it is to purchase a home, and I will say, I wanted to, one of my goals was to make sure I had bought a house by the time I was 30. Not exactly a huge goal or, a major goal or anything, but I just spent so many years thinking, man, I am throwing away so much money paying rent at this apartment, at this condo, at this house that I'm renting, and I'm getting nothing in return. Whereas you can actually get a mortgage that is far less than probably what you're going to be paying for rent at a really nice condo, apartment, whatever it is, and you're actually investing into something. And eventually, you're going to build up equity, you're going to get that back, and then you're going to be able to buy another great house, hopefully several years down the line. And I don't know if you had a similar experience, but again, me growing up, I remember I was just told, you know what, as soon as you can comfortably and responsibly do so, invest in a home. It'll be one of the best decisions you can make.
Yes, absolutely. I think our parents' generation, their parents' generation, and even their parents' generation, right? That was common sense. And for all the reasons that, you mentioned, why pay rent when you can pay down an equity that's going to expand, right? Pay down a debt over time into an investment. So there's a lot of truth to what you just said. Absolutely. But I'll tell you, go back just 12, 13 years ago to 2008 when housing prices dropped 50% and the slow recovery of that, there was a period where people said, are you crazy? Don't ever invest in real estate permanently. Just rent and invest that money into another asset that will appreciate, because these stupid homes, they don't go up. They go down, right? These McMansions. Have you heard that phrase back in the day? Yeah. So there's some truth to that also, and that we'll talk about that today. There's so much that goes on with real estate. But in the traditional 100 years of Americana, absolutely owning land and owning real estate is very, very important. And you can create net worth, by investing in real estate. Absolutely.
Okay, so I guess we can start very simplistically then, and just kind of say, okay, if somebody comes to you and goes, Dewey, I'm here at Great Lakes Wealth. I'm very interested in real estate investing. I guess, what is the Great Lakes Wealth version of what real estate investing is and how you can potentially utilize that to, as you said, potentially build wealth?
So for our viewers out there in YouTube land, for our listeners out there out in podcast land, we're going to take a step back and we're going to talk about the general investing categories, if you will. Kyle, we've talked about this on multiple episodes in the past. We have stocks, we have bonds, we have cash, and we have a few others. What would some of those others be?
Precious metals.
Precious metals.
Go ahead.
Well, let's talk about cryptocurrencies.
There you go. Yep.
Okay.
Which I still kind of understand, but don't understand, but I'm interested in.
Sure, no, that's okay. But just in general, there's always been stocks, bonds, cash, precious metals, and real estate. It actually is one of those top 5. Does that ring a bell?
Of course.
Absolutely. And for everyone out there listening and viewing, we're going to put Kyle on the spot again. How many sectors, Kyle, in the S&P?
11.
11 sectors in the S&P.
Mm-hmm.
And guess what? One of them is
real estate.
Oh my gosh! Ding, ding, ding,
Wow.
ding, ding! Absolutely right. So the S&P is a pie of 100%. Okay, if you have all 11 sectors, that's 100% of the S&P. Fair. Real estate is a small percentage of that pie. Currently, right around 3% of the S&P weighting is in real estate. So it's not the driver of the S&P, but it's absolutely relevant enough to have its own sector.
Mm-hmm.
Fair enough. Important, right? So the category of real estate actually falls under alternative investments. Okay, so your traditional investments, stocks, bonds, cash, and then alternatives. So alternatives would be considered precious metals like gold and silver, gems like diamonds, rubies, and sapphires. I know you have a bunch of those, right?
Yeah.
Rare coins, artwork, trading cards, wine, water even, cryptocurrencies, and timber, as well as today's topic, land, which we'll call real estate, okay?
Mm-hmm.
Fair enough. So why is real estate important? Well, real estate is considered one of the best investment options around. If you go back the past 20 years, the S&P on average is around a 6 or 7% per annum rate of return, considering whatever period of time you look at. Well, real estate on a global level is around 9% per annum. So post collapse of '08, all investments have basically done well, but real estate has actually outperformed the broader S&P 500. Does that make some sense? Does that
Fascinating, yeah.
Right? Yeah. So real estate usually includes 2 main drivers to make it successful. You have an asset that appreciates. You buy that house, you buy that land, you buy that real estate investment. It goes up. Fair enough. That's the whole point.
Mm-hmm. Of course.
Asset appreciation. Well, real estate typically also has cash flow, predictable cash flow. If it's an investment property, if it's any type of income producing property, you have appreciation and you have cash flow, stream of income. Sully loves that in the control room, always looking for streams of income. So with that, real estate's beneficial, okay? But the true value in real estate comes from the ability for it to be purchased with financing, creating leverage. So Kyle, if you buy a house for $100,000, do you have to have $100,000 to put down on it?
No.
No. Do you know
And
this?
that's a huge misconception as well.
Yes.
Even some people believe that you must have 20% to put down on a home, if you're going to be purchasing, and that's just not the case. You can do 3%, you can do 5, 12 is a very common one, 15, 20, whatever it may be. Whatever makes sense for you is really what you should be doing and what you should be putting down on a home.
Absolutely, right? So 20%, I believe, avoids PMI.
Yes.
Right? So that's important. The cost to carry, we'll talk about the risks, we'll talk about the downside, but in the general sense, a bank will give you a mortgage or any type of investment deal you're going to get in on. You would typically get a mortgage anywhere from 100% loan, so it doesn't even cost you a penny. I used to watch these late night infomercials, and they would talk about this when I couldn't sleep. No one watches traditional TV anymore, but back then it was, let me show you how to build a real estate empire, no money down. I don't even know how they did it, but they said it every night. It was, and they always ended up on yachts. They wouldn't even end up on a big mansion. They were on a yacht talking about real estate. It's kind of funny. Anyway, so with that, this leverage does have risk, but in general, yes, let's just say you can put 80% financing, 20% down. So for every 100,000, maybe you just put down 20,000 bucks, and you control 100,000 of real estate. So if the real estate doubles to 200,000, you only put down 20,000. Yes, you have interest payments and mortgage payments or cost to carry, but even if it's 25,000 or 30,000 out of pocket at the end of the day, it's not because the same thing's worth 100. You've sold it now for 200, right? And so you had an $80,000 net, 100 minus 20, to now you have, let's say it cost you all in 30 and it's 200,000. Now you have 170,000. Boom, instant appreciation, instant asset appreciation. Fair enough?
Yep.
So that's the bottom line basics of the opportunity available in real estate: appreciation and income. Okay, so with that, there are 5 main categories of real estate. We're going to go through all of these fastly because, again, listeners and viewers, this is just an intro to real estate and investing in real estate. So with that, there's residential real estate, commercial real estate, industrial real estate, raw land, and special use. Okay? Follow me so far, Kyle?
Yeah.
Okay. Well, I'm going to go through the subcategories because you're going to know them all, and we'll be here for 4 days if we go through all these. But fast and furious, because for the listeners and the viewers, you're going to want to know what falls where. Okay. Residential real estate includes any property for residential purposes. Examples include single-family homes, condos, co-ops, duplexes, townhouses, multifamily residences, and anything that has fewer than 5 individual units. Residential real estate. Okay. Multifamily. You could have a duplex, a quad. That'd be 4 units in one building. Follow me there? Okay, so that might be for some investing. Commercial real estate. Any property used exclusively for business purposes, such as an apartment complex, gas stations, grocery stores, hospitals, hotels, offices, parking facilities, restaurants, shopping centers, stores, and theaters. Oh, that's a lot of subcategories right there, right? And we'll talk about some of those are good and some of those are bad, whether hotels are good investing in this post-COVID climate, theaters, office buildings. There's this whole work from home, forever mentality, right? So there's a lot of different subsectors within commercial real estate, but that's a broad category. Next one is industrial real estate. Subcategories here: any property used for manufacturing, production, distribution, storage, research, and development. Examples include factories, power plants, and warehouses. Okay. Land includes undeveloped property, vacant land, agricultural land, farms, orchard, ranches, and timberland. Man, if we could buy all this real estate, we're going to need a lot of money. Are you kidding me? And then last but not least, certainly a special purpose. Property used by the public, such as cemeteries, government buildings, libraries, parks, places of worship, and schools. Okay, so within those 5 main categories are all of those subcategories I just mentioned. And whether you're just buying a house for the first time like we started the show, or you're going to go buy, an industrial manufacturing facility, all kinds of things to consider. Fair enough?
Absolutely. Yeah.
Okay, so that's a good overview of the different pockets or opportunities within real estate. But real estate has basically 3 unique characteristics compared to other investments. Okay, real estate, aka land, is immobile. I guess there's some parts of parcels that what's on the land can be moved around, but land itself really can't be moved, right? It's immobile. Also, it's indestructible. Land is durable, but indestructible. It's permanent. Now, things on there can be wiped away, tornadoes, Wizard of Oz, remember that? But in general, land will be here, again, unless, you're probably near the ocean or something, that happens not in your everyday world. And then 3 is uniqueness. No 2 parcels of land are exactly the same. They may share similarities, but every parcel differs geographically. These are 3 main things that create unique characteristics of real estate. Okay? And this is a good segue into one of the all-time great quotes for real estate is location, location, location.
Well, of course.
Have you heard of this?
Mm-hmm.
Well, I looked it up, and some guy by the name of Harold Samuel coined this phrase back in 1944. He founded Land Securities, one of the United Kingdom's largest property companies, and he said location, location, location. Fair enough? Okay, and then the economic characteristics of real estate include scarcity, the ability to improve it, permanence of the investment, and location or area preference. Again, location, location, location.
Hey guys, it's Bogey. I want to take a second to talk to you about Dewey Steffen and his excellent team at Great Lakes Wealth. Look, do you feel overwhelmed with managing your assets in today's financial world? I mean, think about the times we're in. Do you want financial freedom instead? Great Lakes Wealth offers Wall Street solutions with Main Street values. They sit down with you to develop custom financial solutions utilizing all of your assets, even your 401k. They build the future you want based on your goals and your dreams. That's what Great Lakes Wealth is all about. Thinking about you, thinking about your family, and thinking about your future. Simply go to greatlakeswealth.us to schedule an appointment today. They offer better investments and better service than anyone out there. Your road to financial freedom starts at greatlakeswealth.us. Please visit greatlakeswealth.us or simply give Great Lakes Wealth a call today.
Okay, so why is real estate important? Kyle, any ideas?
I mean, there's a million reasons. Is there not?
I mean, I guess there's some, yes. So real estate is important as an industry because not only is it a place for you and your family to live, that's not really creating an industry. That's just creating an opportunity for you, right? But as an industry, millions of people earn livings through real estate, not just in sales, but appraisals, property management, financing, construction, development, counseling, education. Many professionals outside of real estate still use it. That would be accountants, architects, banks, title insurance companies, surveyors, and even lawyers. And I'll even say us here at Great Lakes Wealth. We have a real estate portfolio. Go ahead and check it out on our website, greatlakeswealth.us. But real estate is a critical driver of economic growth. In fact, there is a economic indicator that comes out called housing starts. Have you ever heard of that, Kyle?
I haven't, actually.
Okay, well, housing starts is a key economic indicator from the U.S. Census Bureau that comes out, and it talks about building permits, housing starts, which is what the name is, and housing completions data. It allows us to keep an eye on a development or trends of supply and demand. If there's more housing starts, it means more people are looking to buy new homes, new housing starts, new development.
Yeah.
If there's an increase, which we're actually seeing now post-COVID, one of the reasons is because people are in theory leaving the downtown cities, right? They're moving back out to have a little space, a little fresh air, less COVID, right? So there's new housing starts out in the suburbs. And so with that number, it gives clues to how the economy is developing. If there's a decrease in new housing starts, then again, people are not looking to improve. They're not looking to move. They're looking to just stay where they're at. And that may, again, give less work to all of those other industries and people that I just mentioned. So that actually, we can kind of get some ideas of ebbs and flows of the economy along the way. So real estate is a great potential investment, but as an industry, as a category, you can absolutely use it for a lot of information that will help us with, investing or opportunities in general.
Sure.
Fair enough. Okay, so there are some important factors to consider when investing in real estate, Kyle.
What might those be?
Well, let me ask you, what would you think if you were going to buy some real estate, let's talk about, it could be a family home or a business piece of, what would be some of the most important factors that you would consider for looking at some real estate?
I mean, just thinking about my situation now, 4 years from now, I'll be thinking about, a school system and all that. So, yes, I would want to make sure if I'm going the public school route that, certainly there is a good public school system. Even if I'm not sending my child to a public school system and I'm going to send her to a private school system, From a property value standpoint, you still want it to be a good school system because most people are going to send their children to the public schools.
And that goes back to location. What are you trying to get?
Yeah,
Right? Good
absolutely.
location for sure. And then another one would be valuation of that property, right? So everything that you're looking at, and that would be a stock, in this case, real estate, are you willing to overpay? Because you think it's going to grow more later? Are you going to wait and put a low ball offer in? Maybe that's what you do for a stock. You want to wait till it comes down. That could be a rare coin. That could be anything, right? So what's the valuation and what are you willing to pay? If it's a hot market, what does that mean, Kyle?
It's going to be very difficult to get it at asking or below asking.
That's right, right? You gotta overpay. You gotta overpay. The next one is, what's the investment purpose or the investment horizon? What are you doing it just so your daughter can go to public school? So you're going to stay in this house for the next 17, 18 years, or is it to flip it? What we call buy and self-use. Buy and lease out. That would be a rental property. Sully's over there talking to me all the time about flipping. So that's buy and sell, right? And you could do that for the long term and for the short term. So what's the investment purpose or the horizon of that investment? Makes some sense?
Yeah, absolutely. And it seems like, at least for me, and this was one of the purposes in buying the house that I did first, wanting to turn it into a rental property and turn it into a form of income is one of those, factors. So that definitely played a major role in where I bought and how long I hope to hold on to it before we go to the next place.
Right. And so what's the purpose and what's the time horizon? But we didn't put any valuation on what's the opportunity, right? It's just, what was it valued? Is it a hot market or a cold? But then it is, what's your expected profit if you just sell it, buy it for 100, sell it for 200, or what's the potential cash flow keeping it as a rental, right? So again, to the listeners out there and the viewers, these are very simple concepts. And a lot of you we already know all that. We already know that. But you could take that to the next level of investing in a building, in a co-investing in any type of opportunity that's there, and the same concepts apply, right? So it doesn't matter if it's a single family home to a manufacturing warehouse. It's all very important. So the next one is, again, new construction versus an existing property, and how much leverage are you going to put on it? Are you going to pay 100% cash, or are you going to put zero down and use the leverage? Those are two other existing opportunities that you need to consider. Okay. Another one is interest rates and your credit score. The higher your credit score, the more credit worthy, the more responsible you are, Kyle. Did you know this? I don't know if that's true or not, but that's what they say. Okay. 800 is that magic number, right? Above 800, you basically,
you can get whatever you want.
You get what you want, right? And so your credit score allows you to borrow more, but it also allows you typically to have a better and a lower rate. And all of this, when you're just trying desperately to get into your first home, for all of our younger listeners and viewers out there, if you're just trying to get in your first one and get it done, you're not even paying attention to this stuff, but every single penny on your worksheet to make it a profitable investment is interest rate, cost to carry, opportunity to sell, forecasted development, et cetera. This is all very important in any investment you're going to make, but in this case, real estate. Fair enough? Okay. And then you actually need to look at maybe the overall real estate market. Is it something that's specific to your neighborhood or your community or maybe your region, maybe the country? Maybe there's a hot market in Chicago and down in Dallas. Maybe the Detroit market's a little soft. Maybe, X, Y, and Z. So you either can look at the overall picture of real estate investing in the United States or bring it on down to your neighborhood. But I would argue that those trends are all in place. If you see the entire trend in the United States increasing, that's great. If you see the entire trend that housing starts are going down and that real estate is softening across the country, also pay attention. You might get, but, not here, not here, not here. Give it a chance. Take a breath. You never know. The winds have changed.
Well, so much of it is about timing. At least to me, that's my non-professional opinion. Trying to time it properly, to where you maximize the profit on one property and either, again, sell it, hold it, rent it out, whatever it might be. But you're trying to essentially just maximize what you're going to make on that given property, whether it's commercial, residential, whatever.
Absolutely. Absolutely. So again, you have to understand what you're trying to accomplish. And we've talked about this in prior episodes. You need to do your work. Again, we'd argue talk to a professional, and whether that's stocks, bonds, or real estate, make sure that you have a plan in place, right? So I've also come up with a list of mistakes that real estate investors typically make and that you might want to avoid. So if you fail to make a plan, you may plan to fail. So make a plan. Understand what you're buying, why you're buying it, and how you're going to finance it, as well as any curveballs that may come your way from whatever that situation. If it's a rental property, you may have an unexpected expense, whether it be a roof, whether it be a tenant, that's not there for a month or two. There's some of your profit out the window, etc. So make sure that you have a plan. Make sure you do your research. So once you have a plan, we're going to do this, research it. Make sure that you're fully aware of the opportunities. Maybe there's going to be some tax increases in your community, some millages. Have you heard of these mills? Right? Millage increases, right? The taxes associated with the community, if it's a residential. Also understand in any type of industrial or other commercial real estate situation what's going on. Again,
well, it's also a catch-22. If your taxes are going up, that means that, clearly the city is improving. There's a certain type of person that's probably living there. At the same time, you also don't want to pay more, in property taxes and all that. So I've always noticed it's a little bit of both. Like, I'm really excited when I see that the taxes are starting to go up, in my city, because it seems to me that it's growing and it's getting better. At the same time, I hate paying that tax bill. But so it's just, it all depends on your perspective of it.
Absolutely, for sure. So you have to weigh those pros and those cons and decide it, right? For sure. The other one is doing it all on your own, whether it's your personal real estate or investment real estate. Do you want to hire a broker? Do you want to hire an agent? Do you want to just do it yourself? For sale by owner. Have you seen these signs?
Oh, yeah, for sure.
Okay. So you just need to understand, if you do it all on your own, I think you're setting yourself up for failure. You might save a buck or two, you think, in some ways, but you're going to spend multiple bucks in other ways. So again, try not to do everything on your own. Overlooking, again, tenants' needs. If you have a tenant-occupied property, recognizing what they may have as obstacles. And so that's a very important piece of the puzzle, because that tenant is your cash flow. Okay. Getting poor financing. Again, early on, you just want to get what you get. So you're willing to just sign the papers, and you don't know that you might be paying over what the best rate might be available, whether that's 30-year fixed, 15-year fixed, 5-year ARM, 7-year ARM. So those are all very important categories to consider. And along those same lines, overpaying. Everyone wants it now. I want this piece. I want this piece. It's a hot market. I'm paying over asking. Well, if you overpay, that's going to cut into some future potential profits. Fair enough.
Absolutely.
Right? So, yep. And then again, underestimating expenses that may be there. The major headache that I have with home ownership and rental property real estate ownership are those expenses you didn't realize. I say every month I'm nickel and diming myself. There's always something that needs to be repaired, and it used to be $10, $25. Now it's $100, $250, right? Water heaters, window cracks, carpet, paint, roofs, could go on and on. So it could be considered money pit. For anybody out there over the age of 40, why don't you go rent this movie or look at called The Money Pit. And, you'll see that, again, these homes have costs associated with them. So that's the story there. Fair enough?
Yeah.
Okay. There are 10 habits that successful real estate investors should have. We touched on most of them, but we're going to run through them. Make a plan, know the market, be honest with yourself and the opportunity, develop your niche, encourage referrals, stay educated, understand the risks, invest in professional help, build a network, and one day at a time, one opportunity at a time. Fair enough? Location. So investing in real estate, Kyle, I know you wanted to find out, well, how do you get in? What do you do? Right? You can either go and do private real estate, which is, as we've talked about so far, going and buying your home. Anything that you do is just to buy the house, buy the building, buy the property, buy the real estate. And then you can get financing to help you with that. That's called private investing. Fair enough? Okay.
Yep.
So in the public world, though, you can go and you can buy real estate mutual funds. You can buy real estate ETFs. You can buy real estate stocks. You can buy these things called REITs. Have you heard of the acronym REIT before?
I don't think I've heard of that, no.
Real Estate Investment Trust, REIT. This is a specific real estate structured investment where the money goes into a real estate asset with the equity, the mortgage, and other sectors part of the real estate, and then any income produced has to be paid back out to the shareholders, 90% of it. So with all of that, it's an income flowing liquid vehicle. You can just go buy part of this REIT, take your $100,000 and buy and get the cash flow. You don't have to worry about all that homeowner stuff we talked about. Because real estate is a sector of the S&P, you can get access to mutual funds, ETFs, and certainly stocks. So you don't have to go and just save up to buy a private piece of real estate. You can do it through public markets. Okay. Before we wrap up, what other questions you have, Kyle? I mean, this is your show, not just mine. What's going on? What are your thoughts on real estate and in general and rest? And any questions, things I didn't cover for the intro, and then we can kind of wrap it up.
No, I mean, I just think it's fascinating. Obviously, you have to figure out your situation, what's best for you. Is it purchasing the bigger home that maybe you might not be ready for, or is it purchasing the smaller one and hoping that you can cash in on an investment? I mean, I think just from a residential, real estate investing, obviously that's something you have to figure out within yourself and within your family and where you're at, in your steps in life. I'm personally fascinated by the commercial real estate. And, if you're a business owner, is it buying a building? Is it renting out, an area within a building? Because obviously if you own a building, then you can rent it out for other people, and then you can start to make a little bit of money on each of those individual companies that are in that building that you also happen to occupy and have office space in. So there's just a lot there. But again, your company, your personal situation, it's all about what you deem best in that moment and over the next several years.
Agreed, right? It's a personal situation perhaps, or what you're trying to accomplish. Some are just getting started. Some are there trying to, maximize their portfolio and expand it with scale, etc. So I guess to summarize here for episode 39, which is an introduction to real estate investing, recognize that there are both pros and cons to investing in real estate. There are risks and rewards. In general, the pros are you can get passive income. There are tax advantages. It is a hedge against inflation. You have this ability to leverage. It's very important. The cons are it's a lot more work if you buy private real estate or just real estate in general versus buying stocks. It is expensive and somewhat illiquid. There are high transaction costs. We didn't get involved, but usually, again, real estate is 3% for the buyer, 3% for the seller, et cetera, right? So there's all kinds of other costs. And appreciation is not guaranteed, right? So we would recommend overall, to summarize today's podcast related to real estate, that investors need to understand that we have stocks, bonds, cash. We have this broad category of alternatives. We've talked about gold and precious metals. We've talked about cryptocurrencies. Today, we're talking about real estate. So understand that a diversified portfolio probably should consider some real estate in it, no matter whether you're 20 or 120 and investing. But with that, we'll probably do another episode and get into the weeds. We'll do real estate investing 2.0. Anything else to say?
No, a great start. And obviously, as always, you can go to greatlakeswealth.us and find out a little bit more, information on this. But certainly, I think a good lay of the land, to kind of get started.
I'm going to leave us with a quote from Franklin Delano Roosevelt. You know this guy, FDR?
Yeah, familiar.
Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world. Very strong words from FDR. I'm not sure I agree 100% depending on the scenario. But if that's not good enough, we'll end with Mark Twain saying, buy land because they aren't making any more of it. Okay? With that, thanks for listening. Thanks for watching. Kyle, great to see you. Sully in the control room. Appreciate you being here. And with that, episode 39, we're just getting started.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.